Hello, it is Thursday the 10th of April. I hope everyone is doing okay because really the tariff whiplash in markets continues and keeps taking everyone by surprise. Yesterday we talked about the bond markets and what was going on there and why potentially we could see that was the market to watch rather than the fall in stocks. I think obviously Trump was watching it as well, and I think that his fears of a bond market catastrophe is really what convinced Trump to hit the pause button on the tariffs. Much relief from the markets. And then he made a statement saying that the bond markets or the markets were getting yippy, sorry. He said they were getting a little bit yippy, a little afraid. And so he hit the pause button. He basically blinked. The market is therefore having a big relief. That doesn't mean it's gone away. And, it doesn't mean that it's very easy to think, oh, this was just a bluster to get people to negotiate and this is not coming back. The Fed tend to do that as well. When they cut rates or raise rates, they tend to take action until something breaks, to bring down inflation. We always said that they would keep hiking rates until something breaks or it gets fixed. In the case of inflation with the Fed, they were lucky it got fixed. Nothing broke. But we're kind of due as still that correction that we were due. Is it over now and we're going to make new highs in stock indexes from here? It's really hard to say. Let's take a look at what the market is looking at and why this happened first. So the problem, ever since he came into office, Trump has said he wants to get the 10-year yield down because they have a huge amount of debt to roll over, particularly in the first half of this year. We had big bond auction yesterday. We've got another one today. Today is the 30-year bond auction. Yesterday was a big 10-year bond auction. So let's take a look at where are these bond yields. And you can see the US 10-year yield at 4.3%, which is where we were an hour ago when I was watching CNBC. That is not down enough yet. They really need this in the low threes. And so, I don't know. I'm not sure that I entirely trust that, we'll see how it goes. This CPI certainly was a big move to help. Let's take a look now at where we are with this bond yield. And this is the problem. This is the TNX. And this, we could argue that this is a big bull flag in this and we are on our way higher again. One of the key rules in Elliott Wave, and that in Elliott Wave they have rules that can't be broken and they have guidelines, and one of the rules is that a trending market will stay in a parallel channel. And we could argue that from the high that we made when Trump came into office at the beginning of January, that this has been a parallel channel that we broke out of yesterday, which I think maybe might have added to these fears. This is going up again. For me, this is a breakout and a back test, and we could see yields continue to rise from here. They have got a lot of debt to sell. So that's where we are in markets. Let's take a look at how high did we get with stock indexes, and are we likely to continue? If we look at this weekly, lovely weekly bounce from the weekly 200 moving average, very similar to what we did in October of 2022. One of the key things for me this week, for this to be a really good bullish reversal, if we look at candlesticks, weekly candlesticks, when you make a new low and then a big reversal like this, for this to be a bullish piercing line reversal pattern, which I actually think is as good as a bullish engulfing, this candlestick at the end of this week needs to close more than 50% up of the open close of the previous week. So let's take the noise away here so we can see it. That's 5,322. So as long as we close above here, in terms of big candlesticks, we are looking at a bigger reversal. We could, if we close underneath it, then just have a big kind of volatile bounce and not necessarily on this weekly chart be going down again. So 5,333 at the end of the week. And if we look at where we are, we're having a little bit of a pullback. Let's see if that level becomes support. If we use fib retrace levels from this low to this high and look at this whole swing, and then we go all the way up to the highs in December, this is also where we have reversed is a 50% level. Mean reverting markets tend to keep mean reverting, so we could have quite a nasty, this is not, just reverse, retracing to 50% of the entire drop, could mean that if we reverse here, we are likely to do 50% the other way. So we go from this low to high, because mean reverting markets tend to keep mean reverting. In other words, keep making those 50% moves until you break out of this pattern. So I would expect it to come down here today on this back test to 5,183, and then 50% of this low to high, will then become the bounce level, and you kind of tend to coil up like that until you break out. So if we don't, here's the other fib rule. So if we put this 50% on, when you reverse the 50% level, you only kind of confirm the reversal if you go back underneath the 38.2. So we would only come down here if we continue and close on lower time frames underneath 5,368. today. So that's how I'm seeing these stock indexes underneath, continuing low underneath 368. We should see a continued bigger pullback down to 5,176 in the S&P. If not, we're going to keep going higher. And I would say if we close above this 50% level here, 5,334, the S&P's favorite fib retrace level, bar none, is a 786. Fib retrace which would put us back testing this daily 200 moving average, 5,935. So if you miss this first bounce, let's look at this as a pullback and a 50% retrace. Remember, most corrections are at least 3 waves. We may have already done it, but this, would be where I think it would be worth having a go, maybe at another swing higher. And I don't think it's a bad idea, if you just want to stay out for a little bit until this all calms down, because this uncertainty, and everything being driven on by what Trump says and what he's going to do, is very wearing, and the last week or 8 days have been very wearing. So just trade carefully. But that's how I'm seeing the S&P move from here. And if we take a look at the NASDAQ, we've done here's let's zoom out from the swing low that we made in November 2023 in this chart. We have reversed to a 61.8 fib level. When you do that, the golden ratio zone between the 61.8 and 38.2 fib, that's where we are in the middle. When you do this and you bounce from a 61.8 to a 30 back test to 38.2, the support is the 50% pivot level in the middle here, which in the NASDAQ here, we could see quite a deep pullback to 17,611. And if we were then going to see another swing higher, this would be support, and we continue higher to 20,275. If we look at where we are on the daily, we're kind of making one of those messy fib patterns. I would say that this, therefore, we potentially could see a bit of a deeper pullback. Yesterday was the big bounce. Today is the kind of back and fill, see where the support is, pullback day before potentially we continue higher. And I would not be surprised on the next swing higher, maybe in the NASDAQ, that we don't test 20,000 and a fib level of 20,275. If I hide this and we put our fib retrace levels on, that kind of adds up the same way. Not quite a 50% in this one. Even if we move it down to this high and say that was an X leg, it's kind of messy. So that's how I'm seeing this fib. I think there is a potential for quite a deeper retrace in the NASDAQ. Let's look at some other interesting stocks that I think are leading or at least driving the market. Let's take a look. Of course, we always used to say, I keep looking at this one because I think Alibaba might be, I'm waiting for the bounce on Alibaba. I think that could be quite a good sell with everything that is going on. Now if we, I'm looking at the wrong chart here. Let's find NVDA. Huge reversal in NVIDIA. If we look at where we are on the weekly in this one, you know, this is a massive, weekly engulfing candle, no 236 fib resistance. We've blasted through it for all. And so for me, the next resistance comes up here at the weekly moving averages and 50% of this drop. This is moving really strongly. In the pre-market, like a lot of other markets, we're having a little bit of a pullback, but if we take fib levels off first of all, so I think we go higher to the 50% and the daily 50 moving average. And if we look at where our moving averages are, see how this 20 moving average has previously been pretty good resistance and trend support. Closing above it today kind of makes it, for me, pretty good trend support here around 109, and I am still looking for this to continue higher. So today, a back and fill day, and because this outperforms so massively, I think that perhaps we don't get such a deep pullback. But if we were, and I would be wrong, and we would come back and retest the lows if we got back underneath this 236 fib level on a back test, and that's all the way down here at 102. So expecting a pullback and this NVIDIA to continue higher to 119.88 before we have a bigger pullback in this one. A lot of people getting excited about the double bottom potentially in Tesla, and are we going higher from here? I'm going to start on the monthly in this one because I kind of keep looking at where we are in the sequence. If I go to a log chart and let's fit the date. This kind of looks like a wave 1, 2, 3, 4, and we're in maybe wave 5. Now, there's a bit of an argument about this. Let's go back to our regular chart. If this was our wave 4 and this, some people think that we are in a wave 5, which, as I've explained before, can be quite overlapping in the swings in a wave 5. And the alternative is, because wave 2 lasted such a long time, that this is in fact is wave 1. This correction of wave 4, sorry, is an A, a B, and we've got another leg low and a C leg before this is over. And this is just kind of an A, B, C flat correction. Because this swing was 1.618 of the first swing, it could make that true. The problem is, for a lot of people, is, you know, we're back underneath this wave 1. So if this is 1, 2, 3, but in an ending diagonal, particularly in a fifth wave, you can do that. I've explained before that in a fifth wave, you can do these deep retraces like this, choppy overlapping ending diagonal. Now, when you're doing that choppy overlapping ending diagonal, the most common retrace is a 786 fib retrace. So if I measure from this low to high, you can see this is where we bounce from, this 786 fib level here. And when we got above the broke out from this sideways and we got above the 61.8 on a back test, we knew we were going up, at least modestly. And so if we do the same thing here, let's take everything up, all the noise away, except those two important fib levels. So if we look at this swing, if we have just done wave 3, if we have just done wave 3 of that ending diagonal wave 5, here we are at the 786 fib level, we've bounced from it, and so a close and continuing above this 61.8 would say next swing higher. And Tesla, yes, could see a fifth wave new highs from here that would have a mathematical relationship to this wave 1. So likely up here 533, maybe even 609. So you know, we don't have huge high, but that's pretty good, you know, when you consider here we are at 272. So this 272 level is a pretty interesting confirmation level that we need to hold above in Tesla. And I'm going down here to the daily. We need to get above it and hold above it if we're going higher. So here on the daily, here is our double bottom. And so we kind of need to blast out of this, and this becomes support if we're going to do this. Otherwise, the risk is that we just go sideways in a three-wave correction. And if we continue lower, then that more that bigger correction idea is what is in play here in Tesla, in that we have done three waves back here, three waves back, and first wave in three, second B leg, and we've got another leg to come. And then we say, well, then our targets have a relationship to this first swing. So we can measure them. So, in fact, here's our back test of our stick. We can say 295 actually is the level we need to hold above. Otherwise, if this is a bigger correction, and we haven't begun wave 5 yet, we're likely to continue lower to 175 and potentially all the way back to this swing low and at 90 in Tesla. So pretty key support. And remember, when you do a double bottom, or you think you've got a double bottom swing failure, you need to break the high in the middle of the W that you're making. So 292, 295 becomes really key resistance in Tesla. And above it, yes, I think that we could be on our way higher in a bigger wave 5. Let's see. Now, one thing with fib patterns, you know, if this is a 786 fib retrace, where are you going to get the bigger pullback that you buy from? Well, when you reverse at a 786 like this, would mean up to this 38.2 up here. And then 354 would be your first target if we break out here then. And then I would expect a pullback in the middle before the next leg higher. So that's what I would be looking at. This would be the first target if we break out of this sideways range then in Tesla. So that's how I'm seeing those markets. Let's take a look at crypto, because one thing that for me, I've got a few charts I'm looking at here. So one thing for me is Bitcoin underperformed on the downside. Let's move this out of the way. My apologies, I'm not having here we go. Bitcoin underperformed as we were heading lower, didn't fall as hard as the Nasdaq, and we all went, oh phew, you know, Bitcoin's outperforming. But in this huge rally, of course, Bitcoin likewise didn't really hit it out of the park and outperform massively either. And so we are still in this potentially choppy overlapping move lower. Now, if we look at this on the weekly, remember I've been looking at this big 50% level. Remember, all the way back from this low in 2023, each of these swing pullbacks have never gone beyond a 50%, and we are still holding this 50% level and holding this weekly 50 moving average, which is really good trend support. So having had this little false break, I think, underneath this 50% level, I would really like to see today that this then becomes support if this really is a bottom and we're going to keep going higher. At the moment, we're still stuck at this daily 20 moving average, which is trend resistance. And after this huge, big up day, I would like to see some back and fill. No more than 50% yesterday of yesterday's open close would be a really good level to hold. And that comes in, let's see where exact, sorry, that's my dog snoring. It's not me as I'm talking. Okay, that 50% of this open close of this big candle is right where we have this bigger 50% level. So 79,285 is where I'm looking to hold as support in Bitcoin on this pullback today, if we're going to see another kind of trendy continuing higher from here. Back underneath there, unfortunately, wouldn't be very good news. It means a retest of the lows and potentially lower. One chart that I think has been holding up really well is Ripple. Let's keep talking about Ripple. This is Ripple against the dollar. I'm going to take all my scribbles off the chart and let's talk about why. and another one at a really interesting weekly 50% retrace. So if we go all the way back to 2022 in Ripple, which was the low of this swing after this lovely big 3-wave correction, 50% back of this whole 5-wave swing, this previous wave 4. This is a really good place to find support. I got a little bit, worried when Ripple was back underneath this level, but here on the weekly, we have no weekly close underneath 184. I also like how we're back above the swing high we made in 2021. And this is starting to look like a pretty interesting corrective or potentially a bull flag for Ripple, still pretty bullish. Now, have we confirmed the reversal or the bottom here? We're not even back above the 20 moving average, but this is a really good bounce from the 200 moving average, weekly and daily. Hold of these previous swing lows. And so now, the retest is the test. What we don't want is this bounce to be, just a 3-wave correction. We need to shallow pullback and then continue higher. So I'm looking in lower time frames here in Ripple, little 3-wave correction and continuing higher. And I kind of like how we're holding these moving averages. We may just go sideways in this one before continuing higher. We will confirm the reversal. Remember, this is the last swing lower. We will no longer be in a downtrend if we hold these hourly moving averages. Your first target is going to be a retest of these highs here, which comes in around 2.17. And if we're going to look at fib levels for helping us, we're going to look at this whole swing from the high here. Remember, if you think you've got a 3-wave measured move, you put your fibs over both swings. So we're going to go from the high here on the 2nd of March, the beginning of March, to this low, and then we're going to go fib level to fib level. So there's 38.2 and these highs 2.147 then. And really, we shouldn't pull back. And if we're going to do a bigger 3-wave pullback, we shouldn't really close back underneath 1.93, which would be the 236 fib from this low. So 1.93 should be support. 2.15 first resistance. I wouldn't be surprised to see a little bit of a pullback there, and then 2.32 next on the upside, and we'll go fib level to fib level to fib level in this one. And if we hold these lows, our first big swing target is really going to be this trend line resistance and that 50% level up there at 2.7. So, not everything looks terrible with this bounce, but we kind of need some follow through and that kind of pullback confirmation.